volume spikes on a green candle, and people jump in. Why do so-called chase trades fail? You probably looked at the volume. You saw a big volume on a green candle, so you assumed it was buying volume, right? But that's a complete misconception. Volume never tells you whether it's buy volume or sell volume. All you can do is make an assumption. So is there a way to see what's really happening? The answer is open interest. Most people just call it OI. Don't overcomplicate it. I'll show you the simplest way possible. By the end of this video, using just 4 combinations where you should jump in and where you absolutely need to stay away, you'll be able to tell them apart on your own. A lot of people say trading is gambling. Alright, then let's talk about what's really on the table. Every second, bets are being placed. Some people are betting on price going up, and others are betting on price going down. And once there's a winner and a loser, that money comes off the table. You see all this stacked up here? That's open interest. It's the money stacked up before the outcome is decided. Volume is the number of bets that moved across the table today. OI is the total amount of money currently on the table. If this keeps building up, it could mean someone is entering with conviction. On the other hand, if it keeps dropping, it could mean people are folding and walking away. See? Not too hard, right? But here's the thing. Trading is not the same as gambling. In gambling, nobody gets to see anyone else's hand. In trading, if you know how to read it, you can see it. Of course, not everyone knows how. For OI, I recommend using TradingView. First, you can use it for free. Click Indicators and search for Open Interest. Click here and search for Bitcoin. Right now, we're looking at the Bitcoin daily chart. But on the daily chart, it's hard to catch meaningful changes in OI. The daily chart only updates every 24 hours. What if there's barely any trading for 23 hours, and then volume suddenly spikes in the final hour? You won't be able to see that flow from a single daily candle. That's why I recommend checking OI on the 1 hour or 4 hour chart, whether OI is increasing or decreasing here. That tells us what the big players might be trying to do. Now it all comes down to 4 simple combinations. Price is going up and OI is going up too. That's a very clear signal. New players are coming in and adding fuel to the move. They're trying to push this into a strong uptrend. Trends like this often don't break easily. This is often the kind of move we want to ride. This is where we ride with the big players and look for profit. Price is going up, but OI is going down. That means new players aren't really coming in. It's a sign that existing players are starting to exit one by one. There are 2 groups mixed into this move. First, shorts that hit their liquidation price get liquidated, and when those liquidations come in as market buys, price gets forced higher. Second, the big players who went long near the bottom take profit and leave the market. There's no more fuel left to keep pushing price higher. Can price still go higher after that? Of course it can, but it gets harder to tell who's actually driving the move. From that point on, for us, trading that move becomes closer to gambling. Saying there are big players moving price might sound uncomfortable, because it sounds like we're saying the market is being manipulated. But what if there were no big players at all? Ironically, that would make direction even harder to read. Usually, this is where it's better not to trade. You need to switch your mindset to protecting your capital. Price is going down, but OI keeps increasing. That's a very dangerous bearish signal. The big players are betting on more downside. That's evidence they're building new short positions. Buying pressure disappears, and it shows a strong intention to push price lower. You know what they say, don't catch a falling knife, right? This is exactly that kind of situation. Buying the dip! If you don't understand OI, this is where you make mistakes. This is what risk management is. Price is going down, and OI is going down too. This doesn't mean the downtrend is getting stronger. It means the traders who couldn't hold on are getting pushed out. First, the longs that were holding on get liquidated and are forced to sell. Second, the shorts that were driving the move down take profit and exit. In this kind of zone, the longs are usually already wiped out, and the profit takers have already left. This is usually where the downside momentum starts to fade. The drop is likely to slow down, weaken, or start setting up for a reversal. It gets confusing if you try to take everything in at once, right? So yes, I recommend watching this video more than once. For now, just remember this one thing. Price is going up and OI is going up too. That's the spot where we ride with the big players. If the big players are adding more money, it means they have strong conviction in that direction. We just follow them. Of course, even the big players fail sometimes. But there's a huge difference between betting with no reason and reading where the big money is going. The difference is clear. Does this still look like gambling to you? In gambling, you bet on luck. In trading, you read the flow of the big players. That's what traders do. At the end of the day, reading charts isn't just about looking at candles. Big money is what moves the market. Call it big players, whales, smart money, the name doesn't matter. What matters is reading them and trying to ride with them. Of course, candles are important too. OI alone isn't enough. But what if you could read the trend from candles too? Check out my other video on how to read highs, lows, and trends, then trade with them. I hope this video helped change the way you look at the market, even just a little. If even one more person understands this, that means a lot to me. I post chart analysis on this channel every day. Anyone can see how I look at the market, the big players and whales moving the market, and how to read them. I'll keep covering all of that with you.